Welcome, ladies and gentlemen. It's PDAC 2025 Commodity TV here for you as the TV partner. And yeah, it's my honor and pleasure to talk to Scott Melby, the CEO of Uranium Royalty, the world's largest and also the only one uranium royalty company, which is fantastic. And I think, Scott, you guys are doing a great job. Welcome again.
Yeah, it's good to be back at PDAC. So yeah, it is exciting times for nuclear more broadly and for our royalty model. I'm quite proud of this company. It's still quite young. You know, we kind of envisioned the idea and founded the company kind of in the 2017, 2018 time period, and then took it public in 2019. And now, you know, not that much later, we've got 24 royalties on 21 projects, including some of the biggest mines in the world today. And we're really a platform for growth. There's a lot of mines that need mine development capital, and we provide that. We can come alongside debt and equity alternatives and provide financing to this next generation of mines that are needed to close the deficit, and in exchange build this portfolio for investors that love the royalty model. I mean, we basically took the Franco-Nevada wheat and precious model and brought it to uranium.
Yeah, fantastic. And that's what the market needs also, because we need much more uranium. We need more mine financing. How hard, or let's say, how tough is it for you to find new royalties you can acquire? I mean, you are the only one in the market, yeah? So that makes life a little bit easier, but maybe there are other competitors in the space, private equity, I don't know, banks probably.
Yeah.
But how is it for you today, this situation, especially in that horrible uranium market environment, I would call it?
And I give great credit to our small team. You know, due diligence is so important for a company that only has 5-6 employees. It's really using those people with decades of uranium experience in uranium exploration with Cameco, or mine engineering and development, again, with Cameco. We have a thread of a lot of ex-Cameco people in the company, but we're using that expertise to identify two things. One, what royalties are out there already in existence that we can buy and purchase out of a family trust or a landowner, or, you know, it's really uncovering those stones to find them and acquire them. All of our royalties to date were existing royalties. But what we're really actively engaged in right now are establishing new royalties and streams on new mines. And there again, being able to look at a project and say they have the management team, they have the resources, they have the mine plan, and the government and geopolitical risk to be able to be a producer in this cycle. We want to come alongside them with $25, $30, $50 million and help them get either over the hump into production or closer to that point. And it's a very target-rich environment right now. It also doesn't hurt that the uranium equities have pulled back a little bit. So you have a number of miners that are in kind of midway through their mine development phase. They need their next $30 million, and their share price is at a 52-week low. So, you don't want to do an equity raise when your share price is going to be twice as valuable 2 years from now.
Yeah.
So we can come in with that royalty and streaming finance and keep them off of a dilutive equity raise and not force them to go into a bank debt facility. It really seems to be resonating. We've got a number of projects. I mean, the portfolio is heavily overweighted in North America, which is a good thing, geopolitics, but we'd like to do more in Africa and Australia. I just got back from Cape Town, from Indaba, been traveling to Perth, Adelaide in Australia to really add some of these more promising developers into the mix. And it's everything from byproduct operations of gold, copper, nickel, to standalone uranium operations. But it's probably the most enjoyable part of this job is really being a problem solver for some of these more promising companies and being able to provide them finance. And for the investors, I mean, when we launched, most uranium mines were shut in and our portfolio wasn't cash flowing anything at the time. We're now seeing visibility, and I caution that all these forecasts are subject to everybody else's successes. They run the mines and the market prices, everything else. But under our current forecast, we envision about 10 million revenue by 2027, 30 million by 2030, and 50 million by 2033.
Nice.
So
at
that's
almost no cost.
Yeah, we don't have additional cash calls, or that's just if we sat on the portfolio and did nothing. But I assure you, our team is very busy trying to build our 24 royalty portfolio to become 34 and 44 and 54, and so that's where we're going to see some exciting growth and re-ratings in the coming months. So
wow, fantastic, super. That sounds like a good plan. I love that.
Yep.
But I think you also have another joker in the portfolio, and that's your physical uranium.
Yeah.
So there's also a nice upside potential,
Well,
I
to
would
tell
say.
you how crazy this equity pullback in the uranium companies, I think our last time I checked, our market cap was slightly below 400 million Canadian.
Yeah.
And our cash and liquid assets are 338 million. So, largely physical
So we get
uranium.
everything for free.
You get all this for free, yeah. So obviously, we're not pleased that we're at that, discount to P to NAV, but it is a wonderful entry point and probably not much downside given we do have 2.8 million pounds that underpin the company. The average acquisition cost of around $60 a pound.
Nice.
So as we identify new royalty opportunities, we'll sell physical uranium and buy royalties. So
Great. And you are really active for new royalties, right?
yeah, no, that's my number one focus is grow that portfolio.
What do you have cash to really spend money for new royalties?
Yeah.
How do you do that? Or do you go to
So-
the bank and take a line of credit, or how
No.
does it work?
We would sell the physical uranium, and we don't have to sell a lot of uranium to generate the average ticket size of an existing royalty. We've seen opportunities at 5 to 10 million. New financings are ranging from 20 to 50 million. So those are all with our cash on balance sheet and uranium.
Yeah.
We can fund multiple new deals without having to do a
Fantastic.
raise.
Super.
Yep.
Then I would say find them,
Yeah.
finance them, and then get a production. in.
Absolutely.
Super.
Good.
Scott, thank you very much
Yep.
for that. All the
Thank
best.
you.
Thank
Bye.
you. Yeah, ladies and gentlemen, there was Scott Melby, the CEO of Uranium Royalty, the one and only royalty company in the uranium space. And 2027, $10 million, $30 million, $50 million within the next 5 to 7 years. This is what the revenue size is. They do it fantastically well. It's all conservatively managed at almost no cost. This is great. And they have already now 24 royalties on 21 properties, and this is also growing in the future. And don't forget, 2.8 million pounds physical uranium. This is an asset you really want to have in your hand. So check out the company. Thanks for watching us. Bye-bye from PDAC 2025.